up, guys? Welcome back to my channel. For those who don't know me, my name is Mitch, and my YouTube channel is all about the subject of credit. So if this is a topic that you're interested in, please do me a favor and hit that subscribe button. But in today's video, I wanted to speak about a subject that I've been seeing that there's a common denominator with a lot of the clients that I'm working on a one-to-one basis. And I figured I'd make a video and hopefully you can come across it and this can help you. So what a lot of individuals are doing is that they literally, obviously they all fall on hard times and they couldn't pay, some accounts. So obviously they went to a negative charge off and then they went to a collection account. And a lot of them are under this myth that if you wait, well, at least here in the state of California, the statute of limitations are 7 years, but different states are 4 or 5. I believe Kansas City or Missouri, I can't remember quite sure. One of them is even 10 to even 15 years. So again, the statute of limitations vary by state. But here in California, it's 7 years. And pretty much what this individual was telling me is that she pretty much, decided that she heard it somewhere that after 7 years, the item would get deleted and her credit report and her credit score will, it'll be like it never happened and her credit score will be, I guess, magically good. One thing that I do want to point out to you guys is, yes, after 7 years, that's the statute of limitation that collection agencies or anybody trying to sue you can legally sue you. Okay, that's one thing that I do want to let you guys know. Would the account be deleted off your credit report? No. There are some cases that I do see that the account is no longer there, but but 90% of the time the account is still there. It just shows as a negative closed account or a negative charge off. So technically, if somebody's pulling, so like not somebody, but like let's say for example you go to Chase or you go to I don't know, Best Buy, who it is that you're applying for credit, and they pull your credit report, they're able to see that negative closed account. Technically, by law, they shouldn't let that influence their decision. But let's be real, guys. It does. I'm not going to sugarcoat it for you guys. It does. Obviously, they're able to see that you defaulted on whatever it is. And even though it's a negative closed account, they won't tell you that, oh, because of this 7-year-old collection accounts, we're going to decline you and not extend you credit. Again, they're not going to tell you, but that's pretty much it. And again, I want to just bust that myth that that negative collection account will still be there. And if you're waiting for 7 years for your credit to magically increase, that is actually one of the worst things you can do. And let me tell you guys why. Even if you have collection accounts or negative items on your credit report, you still need to build your credit report. There's things that you can do to help your situation. Obviously, if you have a collection account, a charge off, and all these late payments, it's not going to shoot up in the 800s or even 750s. But there are things that you could do to increase your credit score. And I'll be honest, it won't be a difference between night and day, but it'll help because eventually you can actually, when you have money or when you get tax season, whatever it is, let's say you stumble upon some money, you're finally able to hire a credit repair company. They can delete that item for you, and because you were being proactive years in advance, your credit score can immediately jump to the 750s, even in hundreds. Why? Because I've personally seen it. The way the FICO algorithm works and the way the credit game works is that you need to have a thick credit portfolio. You can't just banks need to see that you've been proactive and that you've been responsible for making payments on whatever your situation is. There's a lot of resources out there to help individuals build your credit, and I'm gonna give you guys a quick one. It's called Self-Lender. I believe they changed their name, and I believe it's called selfinc.com. But it's pretty much it's a modified loan. I'm just gonna summarize it, and hopefully I don't confuse you guys as much. But pretty much you pay them on a monthly basis for them to report to the credit bureaus that you technically got a loan, but it's not a loan. But every payment that you make, you will get that money back at the end of the 6-month term or the 9-month term, whatever term that you choose. So if you are interested to find out more about it, just do a simple Google search and go on the website, and it pretty much tells you and explains to you what it is. So those are little things that you can do to build your credit profile. Again, what the FICO algorithm really does, and what it does, sorry, I think I repeated myself. It wants to see how good of a borrower you are. Pretty much how good you are at repaying your payments. That's pretty much what the FICO algorithm is, and it can predict if you're going to default or if you're going to make payments. That's how your credit score is calculated, and that's what that's what your number tells the bank. This person is going to pay you, or this person is going to default within 6 months. It's a prediction. I don't want to get too much into it because I know I can throw a lot of information and pretty much confuse you guys. But if you're waiting for that 7 year for the collection account or the charge off or the negative account to magically fall off, guys, it possibly can, but it's not going to help your situation. You need to do things to build your credit profile and be proactive and building and establishing credit age, because a lot of banks love to see credit age. You can have a 750 and 800 credit score and still be denied for these top tier credit cards. Because why? Because you haven't demonstrated to the bank long enough that you've been able to have to manage credit or be responsible and making payments for a long time. So if you start now with a secure credit card, a self-ink loan, little things like that, it'll help you in the future when you finally are able to delete that account or that account magically disappears. And again, guys, I'm not saying that it can disappear, because it could, but it's not gonna. You're not gonna see like a huge 200, 100 points increase because why? Because you haven't built your credit right, and you haven't built a thick credit profile for the banks to be able to trust you. So I hope this shed some light, and I hope I was able to like explain to you guys, and just for you guys to give a second thought if you're that individual that's gonna wait 7 years. If you guys have any questions, feel free to drop it down in the comments. Feel free to follow me on Instagram. I'm more active on Instagram than I am on Facebook, but I will get back to you. I have like this little OCD where if I see your message, I cannot see that little triangle telling me that I have 100 messages. It'll take me a while, but I'll get back to you. Till next time, guys. See you.